Hey guys, this is Spencer from Wealth Hacks, where we teach you hacks that the wealthy are using to get more wealthy. And today's going to be a beginner's video, and it's going to be about Forex. Okay, so we've done beginner videos about cryptocurrency, we've done beginner videos about stock market, and I held off on Forex for a while because I wasn't getting into it, but lately I've been getting into it, and it has been awesome. And so I'm excited to do this video. And we're going to talk a little bit about what it is, and then more importantly, we're going to talk about how you, as an investor, can make money using Forex. So what Forex is it's the trading of money. Okay, so it's the biggest market in the world. We know that stocks is when we trade stocks, right? Stocks for money. We know that cryptocurrencies is when we're buying and selling cryptocurrencies. Forex is when we're buying and selling money. Okay, and the way it works is every single country out there issues their own currency, right? And when people are buying things, you know, in US dollar and they want to go buy something from Japan, well, now there's going to have to be an exchange there. There's an exchange rate, right? Where $1 might be worth 100 Japanese yen or something like that. And that exchange rate is very variable. And so we can buy some Japanese yen and wait and see if the exchange rate changes a little bit, and then we can sell that Japanese yen and make a little bit of money. We'll kind of show it on the screen here so it makes a little more sense. If you look here, we've got all these different currency pairs that we can look at. The one we're going to kind of focus on and look at is the Euro US dollar. Okay, so this is how much is a euro worth currently at this very moment in relation to the US dollar, and you can see one US dollar is worth about 1.07935 euros. That's the current exchange rate, okay? So we could assume and say, hey, I think that exchange rate is actually going to change. I think 1 euro is going to be worth 1.08 or 1.09 US dollars in the future. And so I'm going to go buy some euros, and then I'll be able to trade it for more dollars in the future than I originally paid for it, okay? So I'll buy some euros with some dollars, and then later on, I'll sell those euros and get some dollars back, but I'll get more dollars than I bought those euros with. Okay, and the reason this whole market is so big and it works so well is the world is huge and constantly exchanging money. Like governments, big companies, people, right? There is money constantly flowing around the world. And the thing that keeps that all moving is Forex, okay? It's these exchange rates that we're now kind of inserting ourselves in the middle of. So we're gonna kind of zoom out and show you what I'm talking about here. Okay, this is the chart here for the Euro US dollar, like we just talked about. Now, if you look here, it's going to say July. Okay, so this is July 2019. In July 2019, if you look over to the right here, 1 euro was worth about $1.13, okay? 1 euro could be exchanged for $1.13. So 1 euro was worth a little bit more than $1. Okay, and as you can see, that's changed. Since July, we're now in February, and it's kind of in a free fall right now. It's gone all the way down to $1 and about 8 cents. Okay, so 1 euro can now only be exchanged for 1 US dollar and 8 cents, and that's a 5-cent difference. Okay, that's a pretty big difference in the world of Forex, and what that means is that someone could have bought someone in Europe, let's say, could have bought a ton of US dollars, right? When this was the exchange rate, when they could get US dollars, one of their euros could get $1.13, and then they can wait and wait and wait until February, and they can sell back all those US dollars they bought, but they're going to get more euros now. Okay, can you see how that would make sense? Because now the exchange rate, a US dollar is worth a lot more compared to a euro, and so they can exchange those US dollars they have in exchange for more euros than they originally paid for the dollars. Okay, so all we're doing is we're buying and selling money. We're hoping that when we buy one, currency, that the value of that currency goes up in relation to other currencies. That's all we're doing. And the way we do that is through what's called online brokers. There's tons of them. My preferred broker is down below. You can click that link. It's an affiliate link. But these brokers are basically what we use online to facilitate all this movement, right? The software, basically, the engine behind everything. So let's talk about you and how this can make you money, right? We don't want to be randomly out there just guessing, like, man, I'm going to buy myself some euros and hope that the euro goes up, right? That's called gambling, and that's not what Forex should be about. That's not what any kind of investing should be about. So how do we make educated guesses here, right? How do we make educated guesses so that we win more than we lose? And there's probably two major ways, kind of three, but we're going to focus on two major ways that people are doing this. The first one is called fundamental analysis. Okay, and what they're doing with fundamental analysis is we're looking at economies. Okay, so with this euro US dollar example, back in July, when we're looking right here on this chart, we could be sitting there, and so one of us could be looking at all of the information that we have and saying, I think Europe is going downhill, right? I think their economy is going down, and I think the US economy is taking off. And what that means is that the US dollar is going to be more powerful and stronger, and it's going to be worth more in the future. So I'm going to basically buy up a bunch of US dollar using my euros and hope that I'm right, okay? And in this case, you would have been right, and you would have made a good amount of money. So that's fundamental analysis, okay? We look at kind of the political factors and the economical factors and try to decide whose economy is going to be taking off and whose economy might be slowing down. The second way that people do this is it's called technical analysis, and I much prefer this one. You can kind of jump in and out a lot faster. And what we do with technical analysis is we're looking for patterns, okay? So we're looking at past price action, we're looking at exchange rates of the past, and we're trying to identify patterns and see if that we can basically catch when the price is going to bounce. So for example, you can see right here, right? The price bounced and went up, and then you can see it bounced again, and it bounced again, and it bounced again, right? So when the exchange rate got down to that level, the price bounced, and it bounced back up, and the euro kind of got a little more powerful. And if we can time that, right, well, we can buy ourselves a bunch of, right here, we can buy ourselves a bunch of euros and watch it bounce back up. Then we can buy ourselves a bunch of euros right here and watch the value of the euro bounce back up. Buy some euros here, watch the value bounce back up. Right here, we can buy some US dollars and watch the exchange rate go the other way, and we can make money going both directions. So the way we identify those patterns, there's literally dozens of different patterns that different traders look for. I'm going to give you a really basic example so you know what I'm talking about. So if you see right here, right, I'm going to draw a line from this spot all the way down to there, about, okay? Whoops. So you can see the line right there. Now, it's not perfect, but it's pretty close, right? You can see that right there at the top, it started, and about when it hits that line, it bounces. It looks like it broke the line and then fixed it this time, but then it hit the line again, and it bounced, and it hit the line again here, and it had a huge bounce, okay? The price difference. And so what we're doing with technical analysis is we're trying to time things like that. And you can honestly do the same thing. Whoops. You can do the same thing on the top, right? I could draw a line on the top and see that every time it hits that line right there, it's doing about the same thing. It's bouncing, okay? It's kind of caught in that channel there. And so we can be buying and selling every time it hits that line and making money. And you can see it's kind of an educated guess, right? Like this is a pattern. This isn't like gambling. We're seeing a pattern happen over and over and over again, and we're basing our trading decisions on these patterns. And yeah, we might not win every time, but we only need to win 50, 60, 70% of the time to be highly profitable in Forex. So the last thing you need to understand, very important, keep watching, is leverage. Okay, so you're looking at this and you're like, okay, so the US dollar went up in value 2 cents compared to the euro. That means I would need millions of dollars. If I'm only making 2 cents for every dollar, I would need millions of dollars to actually make a good amount of money doing this. But that's not the case with Forex. One of the coolest things about Forex is what's called leverage. What leverage is your broker pretty much puts in some money for you, okay? So if I wanted to make these trades and I wanted to trade $100,000 of US dollar, all I would need is anywhere from like $1,000 to $2,000 to $3,000 in US dollars to make that trade happen, okay? And the broker would actually cover the rest. And so I'm technically trading with 100,000 US dollars, and I get to reap all the rewards or the losses from that trade, okay? But I'm only actually putting in my own money, and I'm only actually having about $1,000 to $2,000 to $3,000 in there of my own money to make this happen. Okay, now I could lose that whole thing if things go awry, right? But that also means that I could make a lot more if things go well. So you don't need millions and millions of dollars in order to make this work, because you can use leverage, and even if you're only making 2 cents for every one of your dollars, you're also leveraging it, so every one of your dollars is buying 100 euros or 100 of whatever the currency is that you're buying. Okay, so very important to understand that leverage is how small-time traders like you and me are making money in this Forex world. Okay, and that is Forex. If you've liked this video, give me a tip, which is basically a like down below or a comment. The next step for you, there's actually a link down below, and it's a totally free training, and it goes over how I have been able, in the last 2 or 3 months, to start generating consistent 10% returns every single month of Forex, basically on autopilot. So if you want that free training, it's totally free. All we ask for is an email address. Click that link down below and you can get access to it.